Hello everyone, a very good morning, good afternoon, and good evening to all of the viewers. This is your host Vaibhav. In today's session of Daily Stock, we are going to have the review of the Apple's quarterly earnings, which were released yesterday. We have seen the sharp moves in the Apple stock post these earning release. The main takeaway from these earnings is the revenue slow down overall, but if we look at the segmental results, we still have the highest ever revenues for two important, very important segments, which are iPhone sales and services segment. The revenue drop year on year is mainly because of lower revenues and that too significantly lower revenues from the Mac sales, and there has been particular reason for that as well. The sales in the China are not exactly as per the expectations. The slowdown is quite significant for the Apple in that major market, and that is causing this lower revenue. And if we consider the bigger picture, the revenues have been declining for last couple of quarters. The same holds true for this quarter as well. But then we also have to remember that the Apple is a juggernaut in terms of the revenues it brings in every quarter, and a high base effect can't be ruled out. But still, if we look at its new product launches and rising revenues in the two very important segments, we still have positive sentiments, though we saw initially the Apple shares drop significantly in the aftermarket, but the things have now seems to have stabilized, and there is a pullback in the Apple share price after these low levels were reached, and it is very much trading where it was prior to the earnings release. So there is no significant decline in the share price overall. If we look at the couple of sessions, not only the one session immediately after the release of earnings, let us look at the key highlights, key takeaways from these earnings report. If we look at the net sales numbers, the products have brought in lower revenues for this quarter if we compare it to the September quarter for financial year 2022. The year-on-year numbers are lower for the product, but for the services there is growth of more than 10 percentage point. So that is a bright spot for the company. The operating margin is quite high in the services business, and that is also reflected in its cost of sales. For the services, the cost of sales is not that significantly higher compared to what it was spending a year back, but the revenues have risen twice as much as the increase in the cost of services rise. That is expanding its operating margin as well. So you can say that these are mixed bag of results, not exactly bearish, even though the streak of low revenues is continuing. There is no break from that, but we have some important segments continuing to perform well, and if there is a pickup in the Chinese market, we might even see that revenue drop in the MacBook segment might going to be a sluggish quarter. The forecast is also on the lower side, so there is not much of an excitement for the upcoming quarter. Still, the company is having a solid market share in the smartphone business, and there is this increase in the revenue on services side. These two factors are going to help the company, even though there is drop in revenues on the Mac side. I don't really feel that we need to be overtly concerned at this point in time for the revenue decline, simply because the revenue decline is happening because of the Mac segment, which is not a big contributor to the total revenues. Its contribution, the share of contribution is somewhere close to 10 percentage point. So we have other segments compensating for it, though not as much as we would have liked. If we look at the operating expenses, the research and development, and selling and general administrative expenses have gone up. The research and development spending is comparatively higher, though there is decline in selling, general, and administrative expenses. Because of its better margin, the improvement in margin, the EPS is higher, even though the revenues have not really risen. The earnings for shareholders have risen because of better margins and better company strategy to lower its cost, even though the revenues are not really rising. So we have this 13% increase in its EPS from 1.29 US dollar per share to 1.47 US dollar per share. We have these segmental results divided by geographies as well as category. If we look at the segment revenues for these geographical areas, the Americas remain the biggest contributor with revenues of US dollar 40 billion, upward of 40 billion. The euro comes second with revenues upward of US dollar 22 billion. And then we have this China, Greater China, which has been contributing upward of US dollar 15 billion. And pay attention to this number because here there is slowdown in the revenues, there is decline in revenues, even though the revenues for other major markets are having a upward tilt. The revenues are stable in other major markets. Japan, there is slight decline, and America, there is increase. Europe is also on the softer side. At the sales category for its products and services, the iPhone remains the biggest money pooler with its revenues share upward of 50% with total revenue just little shy of US dollar 44 billion, which is an increase of more than US dollar 1 billion if we compare it to the numbers for last year. The company is expecting that since it doesn't really have a bottleneck in terms of supply side constraint like last year, where it was struggling to meet the demand for its new Apple launches, the iPhone 14. This year, the sales numbers are likely to be better, if not outstanding, we can say at least its revenue share is likely to rise, and we might see even some strong numbers in the December quarter. So the iPhone is likely to be a cash cow for the company. Then we have the services segment, which is showing quite an remarkable improvement. And we also saw that Apple has been paying particular attention and trying to expand its services offering, and that seems to be paying off for the company. Other segments, there is not much of a change, and actually, we look at the other numbers, the Mac, iPad, and wearables, there is decline in the revenue, and that is the major reason why we have this decline in total net sales number. Now, after having considered its fundamental side, where we have revenue drop, but its key segments continue to do well, and on back of that, we can expect the share price to remain stable and in consolidation phase. Though for last couple of weeks, the undertone has been bearish, and that is not really likely to change much in coming weeks as well. We can expect the consolidation to continue, but I am not really counting on the Apple to decline much from the current levels unless anything significant happens, unless any negative development for the company. As the things stand, we can expect it to consolidate and continue to move in a narrow range with its support coming in around recent swing low. It has been finding support for last couple of months around the levels of $170. 170. This time around, it had dropped a little more, but from there on, it has reversed course, and even in today's session, it is continuing to gain ground after having filled this gap caused by gap down opening. And if we consider this trajectory of the Apple from short term as well as medium term, things are not overtly bearish. Let us look at the Apple's numbers. Apple's share price. Here we have it, and I'm expecting it to continue this upward journey for next couple of days, and we might see this prior swing high around US dollar 182.32 being reached in coming sessions. So that remains a strong possibility, as we have seen that it has been able to fill up this gap, and in today's session, it is having a strong upward bias. So the week has started on the positive note for the company, and we can expect it to continue to climb higher. If not much, at least it is likely to keep its bullish tilt intact in this week. For rest of the week, we can continue to look for short-term scalping opportunities where we target the dips in the share price, and as long as prior swing low holds, we can try to profit from this trend of consolidation in the Apple share price. I'm not expecting the Apple to rise too much. You can't particularly rule out the possibility, but the odds are not really in the Apple's favor at this current juncture. So, looking at the possibility, we can count on it to consolidate with the upward bias, and in that, if we get the range right, we can profit as well. So, we will have to pay attention to the recent highs and lows and look at what the range is, and then you also have to get the momentum right, because if you pay attention only to the range but not to the momentum, then also you might not be able to effectively trade in this narrow range for the Apple shares. The picture doesn't really change much on the larger time frames like daily and weekly. There also the bearish tilt from the near term is visible. The daily charting is also suggestive of this bearishness to prevail, but not overtly bearish. As I said, we have this consolidation phase with slight incline on the bearish side. So if we consider this trajectory, it has been making these lower lows and lower highs for last couple of months, but the drop is not such which would suggest a change of course. If we look at the larger picture, particularly after making a low at the start of the year, it went on to rise, and we had this phenomenal run in the Apple share price. Even at the current price level, it is almost close to 40 percentage point up from the start of the year. So the year has been quite good for the company, and we also can look to profit. As I said, we will have to look at the range and expect this consolidation to continue, and we will need to get the momentum right in the short term to really have a chance at profiting. So for next couple of weeks, you can look for opportunity to short it, provided it holds close to or below 190 level, which is going to be its prior swing high. So only if that is breached, we will have to think something on different lines. But as things stand, we do have this formation, which is much more conducive for the continuation of its current trajectory of making lower lows and lower highs. So we can expect the share price of the apples to struggle in this price band of around 185 to 190. So watch out for the share price moves once the immediate swing high is reached, and only if it consolidates and doesn't really want to reach this prior swing high, we can start looking for opportunity to go short on the apple. And for that we will have to keep it under our eyes, keep a watch on it, and see how things turn out for next couple of days if you want to trade and invest from the medium to longer term. From the short term, the momentum is bullish. For next couple of days it is likely to retain its bullish bias, but from medium term to long term we will have to think about how it reacts to this price band, and make our mind only after having seen its price moves for the next couple of days. So that's my outlook for the company's trajectory, particularly its share price trajectory over the next couple of days as well as couple of weeks. Looking at your time horizon, you can decide whether to trade and invest in the short term, or expand the time horizon and look for the opportunities in the medium term to short term. So that is your call. And given the fundamental and technical sides of this trajectory, I have tried to make the best of this current scenario, and we will have to watch out for the opportunities being generated therein. Now it's my time to sign off. If you have any query or any idea to share, do write to me the feedback, and I'll be more than happy to take the discussion forward. I'll be back tomorrow with a equally interesting stock to talk about, and we will be trying to find out the opportunities to trade and invest therein after having considered the fundamental as well as technical side of that particular stock. So do come back tomorrow as well. See you next time around. Thank you all for joining.